Hi everyone, it's Jeffrey Cohen here with Chicago Quantum. Just want to talk to you about week 15. By the way, I'm still moving things around. I am completely not ready to talk to you, but I'm going to do it anyway. And there's a lot of tabs open. Hopefully the system doesn't crash. We've been putting different solvers through their paces. So let's see, what can we talk about? Week 15's been an interesting week. Market's been a little crazy, but maybe in a good way. We attended Quantum Tech, which is a business-to-business conference, and that was really great. We did something different last week. We picked 50 dog stars. We have a client, and we run jobs for him. That's why when I run those jobs, I don't give out the picks anymore on Medium like I used to. And so, but if you buy a run, you get your own picks. And so, we ran a dog star run, a negative run, a short run, and we pulled out the 50 worst stocks that you could own in the stock market today, which is kind of funny, right? And so we started tracking them, and the first day, 41 went down, 2 stayed the same, 7 went up. And I'm not going to say it was that successful every day, but I do have to say that there were days when 1 or 2 stocks went down a lot. Like one stock would drop 25%, and that doesn't happen in normal companies, normal business. And so this is pretty amazing. We found something that works. It seems to work really well, and we'll talk a little bit about that. Got a lot of things to talk about actually, so let's get started. And I'm going to share a little bit of technical stuff too, because I know some people like that. Let's get some pictures open. I saved a whole bunch of pictures. If I do this, does it open them all? Let's try it. Yeah, we're going to open them all up. Perfect. So you're looking at my screen. I'm going to blow them up a little bit. First thing I want to show you is that Bitcoin's been on a tear this week. Now, this is a 6-month chart. Today and Friday, it hasn't been up as much. I'm looking to the side because I have another monitor, and then I pull stuff into the view for you. If we want to take a look at Bitcoin right now, yeah, 62,000. Not shabby, right? But that's high. I just want to point that out to you. That's surprisingly high. I'm actually a little bit freaked out about how high that is, and because what it means, we have this new, I don't know, they're like the Continentals. They're like banknotes, private notes. And people want to trade them. They trade 24 hours a day. They're excited. But remember, they're like banknotes. There's no government backing. There's no gold when you want to turn them in. And I know it's been a long time since we had gold in the United States to turn in for your dollars. But in theory, you've got the respect of the United States of America standing behind your dollar bill, and what's standing behind Bitcoin, I'm not sure. But it's worth talking about because a lot of money is getting sucked into Bitcoin. The next thing I want to talk about is defaults are down. Now, these pictures are in no specific order, but they're important. So if you're a high-risk company, if you're a company that's maybe a default risk, I own 2 stocks. I own NGL and SMLP, and both of those are in high yield asset territory. These are very high risk investments. Not for the faint of heart. Could make a fortune though. These things could triple, quadruple. Unbelievable. I mean, I'm serious. I've got a lot of money in them. I've got enough money, you could almost buy a Tesla. Actually, you can almost buy one of the expensive Teslas with how much money I have in these two stocks. And so, very high risk. But what's interesting is companies like these high risk companies in the United States are not defaulting on their debt. They're finding a way. They're finding a way, and as a result, the cost of money for companies that are very high risk has gone down. In fact, it's the lowest I've seen it in a very long time. I want you to think 6.5% money for a junk bond rated issue. And not that long ago, if you go to the Wall Street Journal's page on this, you see that they were paying 10, 11, 12% money. But now it's way down. And so the good news is, if you're a high-risk company, the window's open. Now's the time to borrow. The good news is you're going to pay less. There's availability, right? And the good news for investors is they're not defaulting. They're getting more frugal. I know the two companies I'm following have become very frugal. Just to check on SMLP, I looked at the job boards. They're hiring people out in the field to work on the pipes, but they're also hiring some internal people. And it said, except for the relentless, continual reductions in force, this is a really great place to work. And so, yeah, just cutting to the bone. Next thing I'm going to show you is NGL. So NGL is a stock that is down a lot. In 18 months, it's down 85%. And sorry about that. I don't think anyone wants to see me that big. Hang on. There we go. 85. And actually, today I was just tweeting. Let's see if I can show it to you. Some investment bank has gone after him. Some trading house. I don't know who it is. I could give you their MPID, though. It's GSCO. And so GSCO decided to go nuts and start putting in buy and sell orders. So their sell orders were at 210, 214. You see the numbers. Remember the numbers. 9,400, 18.8. And on the other side, 9.4, 9.4, 18.8, they got buy orders. And so what's happening is it kind of looks like there's a whale willing to sell anything that they've got at $2.10. This is early in the morning, 10 a.m. And but they're willing to buy at $1.97, $1.98. And so what happens is if the market moves, they're selling at 210 or 214, and they're buying 10 cents, 15 cents cheaper, which is great. 100,000 shares at 10 cents. It's $10,000 in profit. That's a good trading day. But what that does to the stock is it drives it down. And that stock drove down quite a bit. And I just want to show you later in the day. Yeah, it was a 203. It was actually down much lower than that. And you see the same type of behavior. 9,400 at 212, 9,400 at 209. 18,330 at $1.95. I'm sorry, I was wrong. 9,400 at $1.95, 9,400 at $1.97, and so. Oh, and the big buy is at 194, so they're tilting maybe a little bit negative. You're driving the stock down, and so. Personally, I think they have a long way to go before they're paying a dividend or distribution again. I think there's a lot of work to do. But it doesn't help when people are betting against them. And so that just is what it is. Right? It's a free market. Anyone can play. But just know if you're looking for something that's low, by the way, this company generates or will generate, they estimate, $600 million of EBITDA. Their debt, maybe $3.6 billion. In theory, if they weren't going to make any big moves, they could pay off all the debt in 6 years. But I don't see them doing that. This is a company that's moving, that's shifting their business, making strategic plays. I like it. I like it, and if I had more money in my pocket, see, it was 212. It was 211 back when I was talking about it. I think that was yesterday, preparing for the meeting here. So, it's just interesting. Oh, the other thing to point out, which I thought was pretty cool, was the Baker Hughes rig count is up. So you got oil prices going up. We're going to talk a little bit about that. But the rig count's going up. And so, I like midstream, but E&P is good too, exploration and production. And also the oil field services companies, one of them just getting killed. They just reported yesterday. It starts with a K. But the rig count's up. It's up 7 more rigs at 439 for the week. That compares to last year. I mean, it was starting to move down with the pandemic to 529, but we're within 90 rigs, right? We're within spitting distance, and gas rigs are up 1, and that's good. It's good news. It means more activity out in the oil fields. I love to see that, by the way, for companies like the ones we're talking about. If we take a look at crude, and we take a look at it for the month, you see it's bounced quite a bit. It's bounced quite a bit for the month, right? So if you're interested in crude oil, now, by the way, most people, when they think about crude oil, they think about gasoline prices, and they think about the cost at the pump. And yes, the cost of the pump has gone up. We're at $63 a barrel, but if you're in oil and gas, this is great news. You start hitting like $70, we're going to just start drilling like crazy. I love it. Look at 5 years, it hasn't been $70. Oh, it's 73 in September of 18. Yeah, you got to go back to 2018 to get to the highs where we're at now, 3 years later. So I'm loving it. Could happen. If it happens, your oil field bets, oil field services, midstream, E&P, this is all good news, right? And so why is oil going up? Thought this was important. It's a great chart. Million barrels a day, up and down, right and left is time. From the pandemic low, U.S. gasoline, driving your car, gasoline demand was down to between 5 and 6 million barrels a day. Net numbers coming up to 9. And so it's a 4-week average. I think this is important. This was on Wednesday. Gasoline demand is up. Price of gasoline is up. Money's flowing. Right, this is a change. I just thought it was interesting, though, that with oil and gas up, we're not seeing companies that find oil and gas doing that well in the market. And so I'm going to pull up FinViz. That's this, and basically the what I'm doing here, talking to you, is what you could do when you're trying to look at where to invest, or you're looking at different markets, right? And so you just start taking a look. Now, FinViz is a great site. I don't pay for it. They do have a paid service, probably worth checking out. Although I don't pay for it. You can look at your stocks right here. SMLP just slid down a slide, like a kid's slide in a playground. And the reason it did that was they offered preferred for common 30-1. At first it was 27-1, then it was 30-1. And now it's done. And it's funny, this morning I actually thought it looked bullish for SMLP, but let's take a look at the heat map. Love doing this, right? So you can take a look at this, you can look at it for the week, and you say, okay, so how's the market this week? 1 week performance, S&P 500. It gives you an idea on the sectors. So you look at the sectors, travel, not so good, right? But you looked at energy. By the way, energy's tiny. The size is the relative valuation. So all of energy looks like it's the same size as Apple. So there's your oil and gas business, right? It's Apple, or it's all your oil and gas business in the S&P 500. It's crazy how little this business is worth. But oil and gas looking pretty good, but again, your equipment and services is down because there hasn't been as much drilling. Your E&P is down. Look at Hess down almost 4%. COG is down That's actually worth talking about a little bit. Cabot oil, that was one of those high flyers a little bit ago. Refining and marketing is down, even though the price is up. Midstream, not bad, right? Because you have more activity. Those are the larger players, right? They don't really move that much normally because it's a very asset heavy business. And so we take a look at the market and you get a feel for like where's it red, where's it green, right? The airlines, red, red, red. Airlines are not doing well because the pandemic is coming back. And so thought that was important to talk about. This is just a few more snapshots. I'm going to keep rolling. Some people ask in the market, hey, I should probably be looking here. Oh, wow. Somebody asked a question. Hey, Taro, how are you? I love it. Thank you very much. Thanks for listening. This is great. S&P 500 reaching new highs. Dow reaching new highs. And so the question is, why is that? Is it rational? Does it make sense? First off, the stock market doesn't have to be rational. But the second is, I do believe it is rational. I do believe there's a lot of money floating around. Where are you going to put it? I already talked about, think about it this way. If high yield debt is basically a yielding lows that I haven't seen in a very long time, then the question is, where are you going to put your money, right? Put it in the stock market. You also could put it in housing, but at least what I'm hearing, there's not a lot of houses to buy. There's a dearth of supply in the market, and so you could, bonds, right? You could go regular bonds. Let's take a look at regular bonds. There's a reason. So the net of it is that economic activity is up. We're going to find out about earnings, but my sense is, except for something that may be sensitive to this pandemic new surge coming, markets look good. Like housing starts increase more than expected in March. That's the kind of thing I would expect to see in this market. But let's take a quick look at rates. We're going to use FINRA this time. So FINRA, working with Morningstar, you can get bond data. So I just click FINRA, Morningstar, right? It gets right in. And you take a look at the Treasury yield curve. You could look at just general government bonds. It's fine. But I like the yield curve. So what you see here in red is the last close. So short-term money, 1 month, 3 months, 6 months, almost all the way up to 2 years, you're basically paying the government to hold your money. So if you think about it, 2 years, you're going to get 0.16% on your money. Inflation's running 2 to 3%. You could argue that it's specific economic factors driving things like gas prices. I don't care. You're a consumer. Your cell phone costs a little bit more. Your oil and gas costs a little more. Food costs a little more. Whatever. Everything costs, it seems, 2 to 3% more. Housing is going to go up. Housing is going to cost a lot more because of the shortage. And yet you're going to pay 2 to 3% more, but you're only going to get 0.16 for your money. That's terrible. That's not going to happen. Rational people are not going to put their money into federal bonds, into government bonds. And so now let's look at this 10-year number of 1.56%. Now I want to talk about this because, what was it? A few weeks ago, the market went crazy because that number went up. That number was going up to like 1.7. There was talk of it hitting 2%. It's back to 1.56. That's a harmless 10-year number. That basically says, you can see the yield curve still pointing in the upward direction, but people don't know where to put the money. And we're going to get a 1.5%. That's not very much money. If we look at the 10-year yield, you can see what I'm talking about. The 10-year, get over there. The chart is not reading right. I apologize. What I was expecting to see was there's a rise and then a fall, but that's not the right data. I apologize. This is crazy charts. What are they doing here? All right, well, I still love FINRA, but I don't like this data. So let's keep taking a look. I pulled some more stuff together for you. Summit Midstream, my other favorite company. And so, oh, can you speak to any plays around the semiconductor chip shortage? Ooh, that's a good question. Semis. So I will get to that in a minute. So if you look at Summit used to pay a nice, healthy distribution. They used to have an even higher book value per share. And as a result, the stock traded not that long ago for a split adjusted price of around $80, right? Stock's trading now at 20, 21 maybe. Earlier this week it was touching $22 a share, but lately it's struggled. Again, this was a tough day for SMLP. Some great press came out, and this is a challenge, right? So SMLP has money that they owe in May of next year. And they have a bunch of banks they work with. I want to say it's 7 or 8 banks and a revolver. And so what that means is the first lien on the company is this pool of money. You borrow, you pay it back, it's fine. It's the most senior debt that you can have. And so that expires May of next year at the same time that their 2022 bonds expire. Now, if I'm thinking about it, if I'm a bunch of banks, right, these guys are current on their payments. I probably just want to roll over, maybe stretch that out a year or two because I'm making good money on these guys. I think they're paying 4.5% on a revolver. That's actually really nice. And so maybe it won't be quite as much, but I think that's going to be fine. So there's a bankruptcy risk still with the company, and there's still a turnaround play here. And so, but again, you're buying this company pretty darn cheap. And looks like the makings of a bottom right here. So at least that's what I think. I'm not doing anything about it. I'm just pointing it out to you because what happens is once you start studying an industry like this, God, I know so much. They produce every other week a status report to FERC on the Double E pipeline build, which SMLP is responsible for. I just think it's amazing how much data you can get, how much you can learn about a subsector of an industry if you just study it, let's say for 6 months or a year. So, and Terrell, I've got to say, I'm not that knowledgeable in the semiconductor business. There seems to be a few key plays around the chip makers. What's interesting is I looked recently, I bought a new server. If I point this way, it's actually in my kitchen because I have to tear down some of my office where I have my other server and I have to rebuild a little bit. But it's amazing, right? And so what happened was I called up Lambda because Lambda is used by some of the big data people out there. And Lambda helps you put your processing on the graphical processors, not just your CPUs, central processing unit, but your GPUs. And we also use QPUs, but those are by D-Wave. Those you get through the web. If I had to buy one of those pieces of equipment, it'd be like $10 million. I'm not sure there's a play in the shortage. I think the shortage is because of real issues. Chip making is immensely capital intensive. To make them better, to make them smaller, you're talking billions and billions of dollars. And the minute that there's talk of, hey, let's raise income tax, that's all you got to hear, right? So let's say I'm Intel or I'm AMD or I'm any of these guys, even the semiconductor guys in Taiwan, and I've got to think about putting $10 billion of my money into the ground to build a fab that's only good for one thing, which is to make chips. And right now I feel good, right? I think corporate tax rates are down 20%. I've got the ability to write things off. I've got a pretty good process there, a good tax and a regulatory environment. But let's say I'm worried. Let's say there's talk of going up to 35 or 40% tax rate or double the tax rate. I might just wait. The old equipment's fine. The chips are maybe not so good, but you know, you want to go from 20% of my profits to 40% of my profits. Maybe I'm going to wait a while. Maybe I'm going to wait and all I'm going to do is replace the equipment that breaks. And I won't spend billions then. I'll spend millions. And the world can live without fast chips. So I think the real play with the chip business is similar to any of these capital intensive, research intensive, IP intensive businesses, which is you've got to create, even pharma, you have to create an environment where they can earn the money and keep the money. So I think that's important for you. Here's that stock that went crazy. So I'm not going to say that I picked any of these dogs. I won't say it. But I will say that I was on the earnings call for KLXE, which is KLX Energy Services Holdings. They had a really good earnings call. I was actually pretty impressed. Like, they're really going to work hard there and try to fix things up. And, I'm going to read, Charles, what you're asking there. The net of it is the stock has dropped again for the rest of the week, and they didn't like it. Lower earnings. So if we go, let me read your question. So insiders saying supply-demand issue. Deliveries for an order today delivers maybe Q2. Demand is growing. New fab plants in Arizona, but is years out. The story is that order flow is guaranteed through 2Q. And you're right. So the investments would have had to have been made 2-3 years ago, right? The new fabs, the new technology to make the chips smaller. And so it's good demand, but you need the capital invested. And where are you going to build them? You have Arizona there. I don't know. Where are you going to build a fab? And be guaranteed that the regulatory environment is going to protect you. There's a lot of regulatory issues. Right now in New Mexico, they're looking to pass a law to pause new drilling permits for 4 years. They want to do some research. They want to do a study. Well, guess what? 30% or more of New Mexico's state revenues come from oil and gas, come from that very drilling they want to stop. I got to tell you, it makes me pause. Right? Am I going to put my hard-earned money in a company that has pipelines in New Mexico where you're not going to allow their customers to drill for new oil, which means my pipelines run dry? I don't think so. So I'm still back to this issue of highly capital-intensive businesses require a positive regulatory framework. There's not much you can do. You can't really raise prices if the chips aren't there. You have to kind of ride it out. And so maybe you'll see some new competitors in the business, but I haven't heard of any new competitors raising $10 or $15 billion to build fabs. And what about the patents that Intel owns, right? Or NVIDIA, these other guys, you're not going to get those patents. And I think that's where we're at right now. I'm going to speed through some of this. There were some other just quick topics. At the Treasury notes, we were talking about the buildup in yields and now the drop-off in yields. So if we don't have to worry about rising interest rates, that's even more positive for our stock market. The other thing earlier this week is the futures, right? There's a lot of green, whether it's crude oil, natural gas, gold, all the exchanges. I can't believe how much good news there is out there. The other thing driving the markets up is new investors, right? So not only do you have money sloshing around, but some of the stimulus and also some of the people just that are at home, whether you're working or not, you're at home. It's not hard to get stock quotes. They're free. By the way, it's not hard to trade. It's free. I open up an Interactive Brokers account and put in $100. I have access to some of the leading edge tools from Interactive Brokers I never had before. Now, I don't know much about Schwab, but I know TD Ameritrade. It used to be TD Waterhouse. they've got a system as well that's pretty attractive. We use Vanguard, tried and true. It's maybe not the sexiest, but it's probably the safest. But here, Schwab added 3.2 million new brokerage accounts. Right, that's 10% of the whole amount of brokerage accounts they have. So that's a little more than 10% growth. That's amazing. It's amazing. And I don't know how many of those are going to be active, but you don't open up a brokerage account unless you're thinking about trading stocks or bonds or preferreds. Depends what Schwab has. I like interactive brokers because you could trade preferreds, you could trade bonds, not just stocks. And so there's more capability. But I thought this was important to point out, right? Lots of new people in the market in 2021. Yeah, here's the part I don't want to talk about, but I'm going to talk about it anyway, right? Let's talk about COVID. I haven't talked much about COVID because since I've been doing these recordings, COVID was getting better. We started January 1st when the number of new cases was dropping. And in fact, it's funny. Extra time, TV or trade wins. Absolutely it does. It's a way to wealth. And there's some bets out there that are easy to make. So the pandemic bet, this is a bad one. Okay, so this is United States, all regions. This was from a couple days ago. But you see the curve starting to bend higher. Now, this is at a time when I read on the whitehouse.gov website that 46% of all Americans have had at least one vaccination shot or immunization shot for COVID. And that's great for America. I know in other countries they're not as fortunate. India, I think, recently had 200,000 new cases in one day, 1,000 deaths. They're talking about a surge. And in fact, I had the Johnson & Johnson. I'm not feeling any blood clots, but I haven't had it that long. And now they're stopping with some of the vaccinations and they're scaring people, right? And so I don't know how I feel about that. So what I worry about, I think if I were to pull up the new number for COVID, I bet you it's higher than even what I found earlier this week. So daily change, we'll look at all the United States. New cases is 74,000. New cases is 74,000, but the average 7 days is 70.5. So it's up. So 74,000, let's see how that compared. 75,000. So in fact, it's down from when I looked at it yesterday. But that's still up and it's still high. And so what that means is a lot of the bets that we're making on things like travel and dining and consumer products may not be quite as happening that fast. And so those were some of the economic statistics I wanted to talk about. As always, there's a few more that are worth a quick mention. But what I want to do is get back to quantum. I know some of you love all this, the markets. I love the markets too. Let's see. Money markets bracing for issues. Oh, the Russia thing. Yeah, we have some issues with Russia and China I'm going to talk about. So number one, with Russia, they have troops on the Ukrainian border, exercises. They've called the United States an adversary. Our president has called Russia basically killers. And so you have a lot of tension there. You also have some tension with China right now. We've revalidated our defense commitment to the Philippines and also to Taiwan. And we're ramping up weapon sales in the Middle East. And so there's some new global economic concerns, global geopolitical concerns that are going to end up being reflected in the market. I would not doubt for a minute that those are going to be more and more relevant as the time goes on. Well, this is interesting here. You know what? Maybe there's one. How quickly we forget. But retail sales went up more than they had in the last 10 months. So retail sales, pretty amazing recovery. And the jobless claims fell as well, really, since the pandemic. We see a lot of jobs. We see a lot of people continuing to work, and we see money being spent. And so that's another reason why you're seeing markets go up. So I think that's important. So let's take a look at quantum tech. So quantum tech was a good conference, and see if I have to log in. I probably do. Hopefully you won't all see my password. Oh, I'm in. Oh, come on. I'll talk about some of the key events that happened. This year was a good conference. And so I'll talk a little bit about why it was a good conference. It ended up being a really good conference. Clear. It was a good conference because a lot of the things that were talked about we already knew. But you hear about it a second and third time. You hear about it a year later. We were at Quantum Tech twice in person, and so to do it all remotely meant we got to go to all the conferences. And so Carl Williams of NIST, always enjoyable to listen to, and our work with clocks in the United States is pretty amazing. Ole Koch taught us that we need to watch out because we could be in a GPS, Global Positioning Services, denied environment for the cost of a few $100. He actually showed us where you can get the device at Banggood and how it works. But basically, it's a big deal. It's a big deal. You got to think about it. And so what happens is, if you know exactly where you are, and you have like a magnetic roadmap, you can get to where you're going on the Earth without having to ask for directions or without actively pinging a satellite. And so you can see things, you can go places. There is an electromagnetic map that's updated, and you can ride on it with quantum. It's pretty cool. Elena Bodo, I've heard the talk before, but I was pretty amazed. So you go for imaging, magnetic imaging. Like, think about it, right? Your head hurts. They don't know if it's a blood clot, right? Or maybe you're acting irrationally and they're trying to read what's going on in your head. Or you've got psychoses of some sort, right? Epilepsy, and they're trying to figure it out. They maybe want to treat it, right? But you want to see inside someone's head without digging in there. So normally what happens, there's this enormous machine you go into. It's like and you can't move, right? You can't move. Imagine a little kid in there. Or somebody who shakes, somebody who can't sit still. So now they have wearables. And as the quantum sensors get more and more powerful, it's okay if you don't want to shave your head so that they're maybe a millimeter or two away. It can still read as well as these really expensive pieces of equipment that are very uncomfortable. And so the question always is, with better processing, with better quantum sensors and the data analytics capabilities, you can either make your readings more precise. So put that equipment in the big behemoth equipment and you're going to have even better imaging. Or maybe be a little bit further away or a little faster. I thought that was pretty amazing. Element 6, which is De Beers company. Andrew Edmonds talked about diamond solutions. It's amazing. They're producing diamonds. They're growing diamonds to be used as quantum computers. Love it. This is actually a really fun day. Then on Tuesday, and I went to all these. That's why I'm able to talk to you about them. 3 days. Oh my God, I have so much work to do. So Rupak Biswas at NASA talks about some of the work that they're doing. It's interesting. I mean, some of these, there wasn't really a takeaway. It was like a bunch of guys, men and women. When I say guys, I mean men and women. Bunch of men and women talking about pragmatically how they're using quantum. It feels pretty good. And a lot of them talk about how optimization is the play today and for the next few years. Optimization. That's what we do. We optimize stock portfolios. It felt good to hear that, right? Now, second level is going to be the chemistry bits. If I can precisely look at chemistry, if I can model chemical reactions in a precise way and not guesswork, if I can figure out how proteins will fold or how I can make proteins, but if I can look at a molecular structure and figure out how it's going to interact in the body, I might be able to go from 1 million molecular candidates to 10. 10. And from those 10, I do my wet work. And I figure out what molecule I really want to use for drug discovery. How you drive quantum expertise in the company. The big thing was just do it. Matthew Versaghi, who I've heard speak before, in fact, he spoke after at the QEDC. I was able to hear both of his talks. And thank you, Matthew, for the work you do at United Health Group. So they didn't really have executive support. They just had him and a few people with a passion for quantum. And so now they're doing a lot of grassroots education, trial and error, proofs of concepts, and it's working. And what these guys basically said was, it's coming. Their skunk works, their research efforts. It's not only quantum. It's in the context of other data analytics, material sciences, computational advancements, high-performance computing. But if you look at quantum as one of those elements, you're going to do fine. You're going to find 50, 100 people in your large company who want to be a part of this. They still have their day job. They're still part of it. IBM, on the other hand, right, for them, I remember in this session what Dr. Robert Suter said. He said that IBM makes computers, so what they do a 2-hour course for basically sales, marketing, management people to go out and talk to clients about quantum, right? If I can be conversant in quantum, then I can bring the leads back, right? Because I'm selling equipment and services. And then there were other sessions. What struck me was there's a lot of sessions. I went to some of them. What are enterprises doing with quantum? This one I like because it wasn't in this one. It was another one. We actually got some honorable mention as Chicago Quantum, which I was pretty happy about. All right, I got 15 minutes, so we're gonna try to wrap this up. But the net of it is you go find a problem that's worth real money. In our case, find stocks that are going to go up, stock portfolios that are safe to hold, and find stocks that are going to go down. And if there's enough money and if there's enough value, right, you find a way. Where there's a will, there's a way. And they're finding a way. And in fact, D-Wave is helping companies do that. So let me see what else was relevant and important. So investment banking. Jeremy Sosabowski from Algo Dynamics talked a good game about what they're doing. They're doing some great work, and McKinsey's in there too. McKinsey seems to be growing their work in the McKinsey digital area, and just lots of progress, lots of development, lots of trial and error. The equipment, it's not there yet. No one says the equipment is there yet. It's a capital-intensive bet, similar to a pipeline, right? It's going to cost hundreds of millions of dollars to get quantum computers at scale. No one knows the technology that's going to work. There's guys in hoodies from San Francisco that raise hundreds of millions of dollars. And then there's people like the folks at Tencent, who we know, who we like a lot, actually, good people. doing a lot of very good work. Global team. I got up early to hear John Alcock's talk with his team, and they're making their tools available to the public. Right? They're doing research and they're making those tools available. I think it's amazing. And they're really working big picture. More AI, machine learning, and quantum, more big data analytics to try to solve some of those tough problems. And from an investors panel session, the conversation was, is there a winter coming, a quantum winter? And I would say Morgan Politan, who formerly was with Comcast Ventures, that made their one investment, he said, look, once the big funds make their one investment, they're done. They can only have one investment. And so we're seeing a lot of companies, a lot of funds have made their one investment in quantum and they're done. So winter might be coming. The other folks, there's no winter. Summertime. And one of the conversations was around IonQ, which basically merged with a SPAC, raised like $400 million. It was crazy. Huge valuation. Well, if IonQ stock price doesn't stay at that elevated place, winter might be coming a little faster than we think. So Quantum Tech, good conference. And just a shout out to Amit Das, friend of mine, who CEO of Alpha Sites, and just did a great job. So thank you for that. And now I want to talk a little bit about what we've been up to. I'm sure this is the least interesting thing, right? What's your startup up to, Jeffrey? But I like it. I like it. We've made some progress and we've had some setbacks. But generally everything's good. So I'm just going to go to what am I going to go to? Let me click on buy-in analysis. Let me remind you guys what we're about and why it's interesting. So, I'm not here to try to sell you a stock pick, because if you're in the market, you know the value of it. And the value is the 2-hour conversation I have with one of my clients at least once a week where we talk about things, right? So the first is, if you want an efficient portfolio, if you want to pick that needle in a haystack, we can do that. And so this past week, though, things changed. The market came off its lows, post COVID lows. I need to show this to you. It's important. So when you look at the market, I don't want to go 5 years. That's crazy. I gotta show you this. This is actually very important. Just do 2 years. And if you look back here, if you were in the market here, and if you were in the market right here in this fall, right, everything, you look like a hero, no matter what you bought in March. But now we're in April. And so a year ago, we're looking right around this green bar. So once we get past the green bar, you're losing 10% gains. And so suddenly the stocks don't look quite as good. They still look great, but they're not quite as good. And so what's happening is, with each week that follows, this curve flattens. And so our stock pick, let's just look at like what it'll be next week. It's still a healthy growth, right? But this curve right here means that our go long, or our efficient portfolios, have more stocks in them. I remember when we started and we were riding through this whole curve here, I remember it picked PDC Energy at like $12. The thing's trading at 36 now. You would have tripled your money. It was picking 1, maybe 2 stocks. I remember we met with the Federal Reserve Bank, and they thought we were nuts, because they're like, you're picking 2 stocks? What are you doing? There were 48 people on the phone from the Federal Reserve Bank, making sure our quantum model wasn't going to corner the market. But the problem is that you don't know what the market's going to tell you. And so now the market is saying to diversify. 7 stocks it picked on Tuesday night. We ran a lower risk model to see maybe what's going on. It picked 16 stocks. 7 stocks is standard risk. Normally it was picking 3. So the first thing it's doing is for your longs, it's saying diversify out because you need some zig and zag in your portfolio. So that was one thing. The second is we got our bear portfolio. God, I love having a dog. I call it dog stars, because when we wrote our first paper, we talked about all-star portfolios, ones that are going to go up, and dog star, all-star, dog star. They go down. And I didn't realize we would have a model to pick inefficient stock portfolios. And so maybe what I'll do is this. I'll take you over to Yahoo Finance. I have some screeners that I use, and one of them is the big hairy losers, right? And I like to look at this. I like to think that if I pick the wrong stocks, what's going to happen? And what's funny is these are today's, right? And some of these tickers may have been in our picks on Monday. We run on Friday night data, and we have it. There's some real dogs. And so all week, so we took the 50 worst stocks and we've plotted them. There's some real dogs out there. And what happens is they fall pretty fast. They go up slow. They fall. Here's the KLX Energy, which was not one of the 50 we picked. But just to show you how fast that thing dropped. Right? I mean, it rode up pretty nice from like $4, right? But it made it up to like $12. $10, 12. Oh, let's go back a month. $18, $17, $15. Now it's $8.70. It just collapsed. They had a bad earnings call. Actually, it was a good call, but they had bad earnings. Stocks fall pretty fast. And so what if you knew? What if you knew the stocks that were going to fall? If they're in your portfolio, you get out. The other is you might short them or buy puts. And that's a pretty attractive thing to have. So we have that, and that's been working. In fact, it's been working so well that now we're actually working really hard right now. So let's talk a little bit. I had a bunch of stuff I shared. The first is we bought all new infrastructure for the company. We now have a more powerful server. I don't know if it's 10 times more powerful, but it's probably at least 4 times more powerful. That helps because my wife gets mad if I spend all day running these jobs. These jobs could take 10 hours to run. So when I charge you $750, what do you get for that? You get anywhere from 4 to 10 hours of labor, plus I write a nice report for you. You get the use of the powerful servers, you get the use of quantum algorithms, proprietary solvers, and in many cases, a quantum computer as well. So, all new infrastructure. Can't let D-Wave have all the fun. Then our short or reverse portfolio analysis blew us away. 41 losers in the first day. So we're going to run this again. Our client's going to get that list probably on Saturday. Monday morning, what's a client going to do? No guarantee 40 are going to fall, but it's pretty good. The other is, should we, and I want to ask you the question, look and see if anyone's out there, should we add the NASDAQ capital markets, right? Those listed stocks to our model. And so what happens is smaller companies with less compliance requirements end up there. It's kind of similar to the New York Stock Exchange American, but American has a flavor to it. If you like minerals and if you like that kind of exploration, then you like the American. The NASDAQ capital markets are more technology enabled. So I'd like somebody to answer. Should we add capital markets? It'd probably add 300, 400, 500 stocks to our run. Get us up to 4,000 stocks, which means more late nights. The other thing I wanted to ask, I put it out on Twitter. There's a question for you guys, right? Nothing's free in the world, but some things are free. And one of the things free is we produce a list of all the negative beta stocks in the 4 listed exchanges, and we do it against the S&P 500. Sometimes we do it against QQQ. We validate the data. It's over the past year. So the most popular tweet that I sent last month was a list of all the negative beta stocks we found. So I'm asking, do you want to see it again? It's not trivial. It's not a big deal, but it's not that trivial to do it. I actually posted it on the website, and people looked at it. Negative beta stocks. But no response. So if you want it, do me a favor. Like the tweet, reply, say yes, retweet it. All those things help us to understand that you're out there, you're listening. And last thing I want to talk about is we've had some trouble lately with some of the D-Wave solvers. And so it gets frustrating because as you get larger, as you're running consistently 3,500 stocks, and now maybe it'll go to 4,000 stocks, you need all of your proprietary solvers to work great, and you need your D-Wave solvers to work great. And so we had to go back and basically strip it down, strip the wood down, take the finish off, take the paint off, resand it, and we're rebuilding all of our matrices again. What's interesting is there's a choice that you have, right? Symmetric matrices or upper triangular only. And what I didn't realize was if you're using an upper triangular matrix, it has different values than a symmetric matrix. It isn't just delete the lower half, right? You have to actually kind of gather up the data from the other half. So it's 2 times the covariance. And the reason is because it's 1, 0, and 0, 1. So we're having to do that. A little bit of a breakthrough today on some of that code, which is great. And going back to the book, basically, and recoding things to the spec that D-Wave put out there, using DIMOD, using binary quadratic model, very specific dictionary definitions. And so by doing that, we're getting some pretty good results. So that's actually why I was a little bit late for this call, is we're coding like crazy. It probably won't be in this weekend's run, but I would say by the end of next week, we're going to have deeper and even better answers than we do this week. So I want to thank you very much for listening. Appreciate your time. And I want you all to have a great day. Have a great week out there. You take care now. Bye-bye from Jeffrey Cohen, Chicago Quantum.